They say history is written by the victors, but what if the truth was buried with the fallen? Every secret leaves a trace, if you know where to look. This is The Broken Truth, decoding history, one broadcast at a time. The Broken Truth Podcast, where history meets conspiracy. Every case tells a story, every story hides a lie. This week didn't arrive with a single defining catastrophe. Instead, it arrived with signals. Layered, quiet, and coordinated. A terror attack in Australia that instantly reshaped national security posture. A Federal Reserve rate cut that looked measured on the surface but fractured underneath. A widening drone war and port strikes that threaten global trade without triggering formal escalation, and continued pressure in the Pacific where words and patrols increasingly replaced diplomacy. This wasn't a chaotic week, it was a positioning. History shows us something important. Major shifts don't begin with explosions, they begin when multiple systems lean in the same direction at once: security, money, infrastructure, and narrative. This is your Broken Truth Weekly Intelligence Brief for December 7th through December 15th of 2025. Welcome back to the Broken Truth Podcast. I'm your host, Garrett, and this is your weekly intelligence brief, where we strip the noise out of the news cycle and focus on what actually matters. This briefing follows 3 rules: facts before interpretation, analysis grounded in precedent, no panic, just clarity. You're not here to be scared. You're here to be informed before the narrative catches up. Let's get into it. So into the global headlines. Bondi Beach terror attack in Australia. What happened? A mass casualty shooting at Bondi Beach triggered a full terrorism investigation, public warnings, and a nationwide security response. Why it matters. We have high visibility attacks in Western democracies, and they almost always initiate a familiar policy cycle: expanded policing authority, accelerated intelligence sharing, pressure for new extremism and speech laws, increased digital monitoring. This isn't theoretical. The same pattern followed attacks in London, Paris, Brussels, and Sydney itself in prior years. The immediate story is tragedy. The secondary story is policy acceleration. 2. Australian bushfires escalate early. Fast-moving bushfires destroyed dozens of homes and killed a firefighter, stretching emergency services early in the season. Disasters like this don't just test weather response, they test insurance solvency, infrastructure resilience, evacuation logistics, and public trust. When disasters arrive earlier and harder than expected, governments are forced into emergency posture before budgets and systems are ready. Federal Reserve cuts rates by 25 basis points. The Federal Reserve lowered interest rates to 3.50 to 3.75%, with dissent inside the committee. Some members wanted deeper cuts, others wanted none. Rate cuts are not inherently bullish or bearish. What matters is why they happen and how unified policymakers appear. A divided Fed signals uncertainty, not confidence. Fed economic projections reset expectations. Updated projections showed slower growth expectations and lingering inflation pressures. This tells markets that policymakers see fragility, even if they avoid that word publicly. When projections move before headlines do, they're telling you where risk is building. China-Taiwan messaging hardens. China reiterated Taiwan as a non-negotiable red line following a U.S. security strategy emphasizing deterrence. Taiwan welcomed the U.S. posture. This is the classic escalation ladder: strategy document, official response, military patrol normalization, and elevated baseline tension. This is not pre-war rhetoric. This is pre-normalization of higher risk. Ukraine drone attacks expand in scale. Russia reported hundreds of Ukrainian drones intercepted, including near Moscow-linked airspace. Drone saturation warfare is cheaper, scalable, and politically ambiguous, perfect for long-term pressure campaigns. This isn't just battlefield evolution, it's economic warfare by proxy. Russia targets Ukrainian ports. Port strikes damaged infrastructure and foreign-owned commercial vessels. Ports are not military targets, they are economic arteries. Targeting ports raises insurance premiums, disrupts food and energy exports, pressures global supply chains. This is how wars export inflation. Iran raises gasoline prices. Iran increased subsidized fuel prices for heavy users. Fuel policy in Iran is never technical, it's political. Fuel price changes historically. Proceed.
Sorry to interrupt your regularly scheduled podcast, but this episode is brought to you by the Broken Truth merch. Support the show. Wear the truth. Official Broken Truth podcast merch is live now. Links in the description. And since you've made it this far in the episode, comment hashtag Broken Truth and leave us a 5-star review on your favorite platform. Because when you speak up, the algorithm listens. And so does the world.
Domestic unrest. Governments adjust fuel policy when fiscal pressure outweighs fear of backlash. Gaza ceasefire strains. Reports describe friction over ceasefire enforcement and uncertainty around next phase negotiations. Ceasefires fail, not when fighting resumes, but when political trust collapses. That's when unpredictability spikes. NATO emphasizes winter readiness. NATO communications highlighted cold weather readiness across northern regions. Winter multiplies energy vulnerability, infrastructure strain, and civil unrest risk. Military readiness increases when governments anticipate stress, not stability. Moving on to the geopolitical tensions, across multiple theaters, the same strategy is emerging: pressure without declaration. Drones instead of invasions, ports instead of capitals, patrols instead of treaties, strategy documents instead of ultimatums. This is how modern conflict spreads without triggering unified response. Russia and Ukraine are testing economic pain thresholds. China is testing response timing and narrative tolerance. NATO is preparing quietly for seasonal instability. None of this is accidental. It is managed tension, calibrated to avoid escalation while reshaping reality. The American market breakdown. The stock market. Markets reacted calmly to the Fed cut, but calm is not confidence. Low volatility combined with thin trading volume, defensive sector strength, and narrative-driven optimism historically precedes repricing. Markets don't collapse when fear is high, they collapse when complacency peaks. The housing market. The housing market still remains frozen. Sellers are locked into low rates. Buyers are priced out. Inventory is constrained, and new construction slows. Frozen markets don't heal, they delay adjustment. This was true in 2006 to 2007. It was true in early 2020. It remains true now. The dollar. The dollar sits at a paradox. Rate cuts weaken it structurally. Global instability strengthens it tactically. This creates volatility without direction, until confidence breaks one way or the other. The bonds. Bond markets reacted more honestly than equities. The bond's price is moving toward growth expectations, with policy credibility and future intervention. When bonds move before stocks, they usually win. Consumer health. Holiday spending masks stress. Credit usage remains elevated. Savings remain low. Buy now, pay later continues to expand. Consumers don't collapse suddenly. They retreat gradually. That retreat shows up months later in earnings and employment. The crypto market. Crypto remains sensitive to two forces: liquidity expectations via Fed policy, risk perception via geopolitics. Rate cuts help. Wars and terror events suppress this. The net result: compression often happens before expansion. Surveillance technology and control. Terror incidents accelerate policy. This is historical fact. After attacks, governments expand monitoring authority, intelligence budgets, and platform compliance requirements. The language is always the same: prevention, safety, security, and coordination. Digital identity systems and AI governance frameworks advance fastest during moments of fear, not calm. Control rarely arrives announced, it arrives normalized. The pattern recognition this week confirms a larger convergence. Security shock raises tolerance for control. Monetary uncertainty reshapes liquidity behavior. Infrastructure attacks export economic pain. Great power competition avoids escalation while hardening lines. The historical parallel. The late 2000s shift did not begin with collapse. It began with policy coordination under stress. That's where we are now. The 30-day watch window, late December through mid-January, historically carries elevated risk for cyber incidents, infrastructure disruptions, and policy acceleration. Not because systems fail, but because attention drops. So what you need to know: terror events change policy faster than debate. The Fed cuts matter. Dissent matters more. Drone and port warfare is economic warfare. Housing freezes create delayed volatility. Digital control frameworks expand quietly. Calm weeks often precede loud months. This has been your Broken Truth Weekly Intelligence Brief for the week of December 7th through December 15th. Stay aware, stay awake, and stay free.
In a world built on hidden histories and half-truths, we've only just begun to peel back the layers. Because what you've heard tonight was never meant to be known, but you were meant to find it. If you're ready to go deeper, leave us a review, comment your thoughts, share this episode, and step inside the archives. Join the inner circle, where the real evidence is kept. This is the broken truth, because the truth isn't whole, it's broken.